My name is Joe Panetta. I'm the Chief Operations Officer for the Department of Education, responsible for finance and administration. I've been asked to provide a short summary of the state aid funding formula, known officially as the Public School Support Program. And I'd like to just spend a few minutes going over that program. We've done many workshops on the plan. It takes many times 4 to 5 hours, so we certainly won't spend that much time on it. I'll cover the high points of it. The Public School Support Program is basically a 7-step program that provides allowances to county boards for funding for their instructional programs. The way the formula works, we compute the total allowance that includes both the state share and the local share through each step, each of the 7 basic steps of the formula. It's pretty much based, the premise is it's based on enrollment, so the number of students each county has. There's an allowance determined based on that enrollment. The first step provides an allowance to county boards for the employment of professional educators, and those are classroom teachers, principals, assistant principals, central office staff, and so forth. It does not fund other professional personnel as treasurers and other folks who are attorneys and so forth, support personnel. It only provides funding for professional educators. And basically, it provides, the counties are divided into 4 categories throughout most of the formula to provide an additional number of personnel for the counties who are sparsely populated, the counties who have a low student population density, and it provides a higher ratio of funding for those counties. The 4 categories are sparse, student population density low, medium, and high. And there's a progression that the number of personnel allowed funding service and professional is a little bit lower as you go from sparse to high. And the premise of that is to provide additional funding for the county boards who cannot operate on economies of scale as efficient as a larger county, because obviously your class sizes are usually smaller in a sparse county, and it takes more service personnel simply because the sparsity of students and transporting them to and from school and so forth. So it provides a little higher ratio to provide for those differences. Step 1 is again the allowance for professional educators, and the average for the 4 categories is about 72.5 professional educators for each 1,000 students in net enrollment. So it provides an allowance for that number of personnel for each 1,000 students. Step 2 of the formula is a step that provides an allowance for service personnel, and it works very similar to professional educators. The ratio is an average of 45 service personnel for each 1,000 students in net enrollment. Step 3 is a step of the formula that provides an allowance for employee benefit costs. In the code, it's termed fixed charges, but that's to provide again, funding for the county boards for their employer share of costs for like FICA, workers' comp, unemployment, and so forth. Step 4 is an allowance for transportation, and it's the operating cost for the transportation system, because the allowance for the bus operators is in step 2, the allowance for their employer benefit costs is in step 3. So step 4 of the formula is a step that provides an allowance for the operating cost, fuels to fuel the buses, maintenance, replacement parts like tires, batteries, and so forth. So that's a step that provides funding for those costs for each county. Step 5 is a step that provides an allowance for a category that's counselors and nurses. Those are classified as professional student support personnel In 2008, when the formula was last revised, those two groups of classification of professional educators, counselors and nurses, were moved out of step 1 and are now funded separately under step 5, but the funding is set at a set dollar amount, and it's not based on a ratio like the first two steps where we talked about 72.5 professional educators for each 1,000 students. Step 5 is a set dollar amount, and that's the funding that's provided to all the 55 county boards. Step 6 is the allowance for other current expense, for substitutes, and for the faculty sentence. Another current expense is the operating cost, maintenance and operation of the buildings, because again, step 4 provide the operation cost for the transportation, so step 6 is a step that provides operation cost for operation of the school buildings, again, maintenance cost, utilities, and so forth. And that's 10% of the allowances for steps 1, 2, and 5. It's a simple mathematical calculation, pretty easy to compute that allowance. The allowance for substitutes is also in that step of the formula, and it's at 2.5% of the allowances for steps 1, 2, and 5. It's an allowance provided to county boards for their substitutes, both professional and service. The third element in step 6 is an allowance for the faculty sentence at $200 that's distributed to each faculty senate member, and that's a step of the formula that provides that funding. Step 7, the final step of the basic 7-step formula, is an allowance that provides, it's a step that provides an allowance for improvement in instructional programs. It's really got 3 subcategories. The first one is the funding provided to county boards for their innovative programs, and it's a step that provides funding for textbooks and so forth, instructional material supplies, things like that are actually needed in the classroom. The second subcategory is a step that provides funding for technology, and it's an additional funding that's an increase over the local share. How it's computed is it's the increase in local share from one year to the next. 20% of that increase and local share increase is about $11 million a year, so 20% of that increase is dedicated for the purpose of providing additional funding to county boards for purchase of instructional computers and so forth, technology, 21st century technology. Then the third element of step 7 provides a little bit of a funding for advanced placement programs, and it's about $500,000. The total of those 7 steps is what's considered the total foundation allowance, and that again includes both the state and the local share. From that total is subtracted what's termed a local share. That's the projection of what each county is going to collect in their regular levy tax collections for the year that we're discussing. And this year, we're talking about fiscal year 16. So it's the calculation is based on the assessed values that the 55 county assessors certified as of March 3rd for tax collections starting July the 1st for fiscal year 15-16, and that's what local share is. It's a projection of the projected gross tax collections from the regular levy, and that includes both real property and personal property. There's some allowances built in. There's an allowance for uncollected taxes of 4%. There's an allowance for the 2% that goes to the assessor's fund, and actually the calculation is based on 90% of the total, so that counties have discretion of spending the first 10% of their tax collections that the sheriff collects and pays over to the county boards. This is a step that makes our funding formula one of the most equitable in the nation, because simply, again, as I briefly explained, we calculate the total allowance, and it can be thought of as the foundation allowance needed to provide a basic educational program for the 55 county boards. From that is subtracted what a county can contribute to that effort, their regular levy tax collections, and then the state share is the balance. And so obviously it's a fairly equitable funding formula for all 55 county boards. And that local share percentage statewide averages about 23%, but that percent varies county by county depending on what their property wealth is in each county. A county like Wirt and Lincoln, who have very little property wealth, their percentage of state to local is around 90%, 89%, somewhere in that range. The counties who have a high property wealth, like a Marshall, Wetzel, Doddridge, because of the exploration of gas production and drilling the Marcellus and the Utica shales right now, their percent of state to local, their local share is around 85%, so their state share is about 15%. So you see that wide variance. Percent of total allowance is made up by the local and a percent is made up by the state. But in essence, all 55 counties have the same, relatively the same funding all the way through to provide a basic instructional program. What causes a little bit of a difference in equity is the excess levies. 43 have excess levies. So obviously the excess levy tax collections are not equalized in the formula, so the counties who are able to pass an excess levy and generate additional funds through those excess levies have additional funds to provide programs to students, where the 12 counties that do not don't have those resources. That's a brief overview of the formula, but I understand that's about all the time I have, because we definitely want to talk about the property taxes. And Amy Willard is going to discuss the difference in the amount projected taxes of the local share comes from the real property and the portion that comes from the personal property. So I'll turn it over to her. Thank you.
Thank you, Mr. Knapp. We'll hold questions until our presenters.
Okay, thank you.
We'll come back to you. Next, if you don't mind identifying yourself, please.
My name is Amy Willard, and I'm the Executive Director of the WBDE Office of School Finance. Statewide, personal property tax collections currently make up approximately 34% of all regular and permanent improvement levy collections, and approximately 36% of all excess levy collections for county boards of education. As you will see from the schedule in your packet, elimination of the personal property tax would result in a statewide decrease of $185.9 million in regular and permanent improvement levy collections, and an additional $181.4 million in excess levy collections, for a total of $367.2 million in lost property tax revenues for the 2015-16 year. However, due to the nature of the local share calculation in the state aid funding formula, if the county's regular levy tax collections go down, the amount of state aid funding goes up. It's an inverse relationship. WBDE estimates that elimination of the personal property tax would cost the state approximately $153.6 million due to the decrease in the local share calculation and the resulting increase in the state aid funding. After receiving the additional state aid funding through the Public School Support Plan, the county boards of education would experience a net reduction in revenue statewide of approximately $213.6 million. The impact varies per county depending on the assessed values in the county and whether the voters have passed an excess levy and how that levy is structured. This would have a potentially devastating effect on the county boards of education. We have asked 3 county boards with varying perspectives to present here today about how they would be impacted if personal property taxes are eliminated. So I would like to turn the floor over to Dr. Ron During from Kanawha County Schools.
Good afternoon. My name is Ron Deering, and I'm superintendent of Kanawha County Schools. We were asked to come here today to speak about eliminating the personal property tax. Eliminating the personal property tax will cost Kanawha County Schools $2.9 million in regular levy alone. If we do not raise our rates from the excess levy, it will cost us another $14.5 million. We could recover most of the projected loss. However, the majority of the homeowners in Kanawha County will experience an increase in their taxes. Homeowners with a $125,000 value would get a minimum of a $38 increase. The homeowner is the one that would be most affected. Naturally, with those cuts in funding, so would cuts have to happen in the school district. There would be professional and service salaries in excess of 200 days. We would have to go to the state minimum. Our dental, optical, and income protection that we provide to our employees would have to go. There would have to be cuts in textbook supplies and contracted services. We would have to reduce construction, repairs, and maintenance, and custodians, counselors, and our teachers. Even if we raise the rates of our local levy to make up the excess levy, as I stated earlier, we will lose $2.9 million from our regular levy. There would have to be personnel cuts. This on top of the $1.6 million that we just recently asked to cut from our budget could have a devastating effect. Our fear is that if we raise the rates when the excess levy comes up for renewal, it will affect the passage as a future levy. For Kanawha County Schools, that's in 2019 for Kanawha County. I realize there are difficult decisions that must be made. I can't imagine how difficult it must be as you look to the future of our state and our people. However, I leave you with this. Kanawha County Schools is the second largest employer. In most counties, the school system is the largest employer. This will have a devastating effect on the economy of West Virginia. For the average homeowner, the tax break they would receive on personal property would not offset the increase in real property. If we have to raise the excess levy rates in Kanawha County, one of the largest budget items is personnel. If we do raise the taxes and increase it for our homeowner, we will lose 63 employees. If we choose not to raise it and hope that in future our excess levy will pass, we will have to cut 368 people from our employment, a little less than 10% of our workforce. The question becomes, will providing a tax break on personal property taxes be worth the increase in unemployment and providing a less than adequate education to our children? Thank you.
Thank you. Next, I think we have Mr. Mowry, Treasurer of Pendleton County.
Good afternoon. My name is J.P. Mowry, Finance Director for Pendleton County Schools. As far as county school system budgets go, one extreme is Kanawha County, kind of the other end of the extreme is Pendleton County, one of the smaller counties in terms of budget and population in the state. Pendleton County does not have excess levy or a bond levy, so the numbers aren't nearly as large as what was just discussed with Kanawha County, but we do get to keep 10% of the local share, and the personal property percentage of that would be around $60,000 per year for a county like Pendleton. With a fund balance per year of around $50,000 to $100,000, and that's a cumulative carryover, losing $60,000 per year, while seemingly a small number in a $10 million budget, over 10 years is roughly $600,000. So it would have a very definite impact on the budget. Thank you.
Thank you. Next, we have Mr. Darren Butcher, Treasurer, I guess, of Raleigh County.
My name is Darren Butcher. I'm the treasurer of Raleigh County Schools. The elimination of personal property taxes on Raleigh County, we would lose about $6.5 million in regular personal property tax collections, about $7.7 million in excess levy tax collections. Even with the offset from local share, we would lose about $8.7 million a year. The information provided to you by the Department of Ed does not reflect that in comparison with the FY15 levy order and rate sheet, we are already losing $450,000 in regular personal property taxes and another $530,000 in excess levy tax collections. The total tax collections for 16 are expected to decrease $992,000, due mainly to the idling of mining interests and continued stagnant economic growth. We're also facing some issues with Medicaid. Our Medicaid revenues have decreased 50% since 2013 due to changes mandated by the Federal Centers for Medicaid and Medicare Services. In addition, our child nutrition costs are increasing at an alarming rate due to community eligibility provisions that we adopted and increased food-related costs. Any decreases in federal food subsidies will cause a negative impact on Raleigh County as well. The impact of a reduction in funding for personal property taxes would have a devastating effect on our budget. The loss of $8.7 million annually in personal property tax collections would produce unsustainable cuts in areas of building construction. Historically, Raleigh County sets aside about $2.5 to $4 million a year for permanent improvements, for building construction and renovation. New elementary school currently costs about $18 to $20 million. That means about every 6 years we have enough funding to fund a new building in our county. It would be impossible for the county to provide sufficient funding for building construction and renovation. Raleigh County is the only county within the state that offers a fully integrated technology initiative at all levels of instruction. Students in grades 3 to 12 all have an electronic device, and students in grades pre-K to 2 have an electronic device provided by the county. This also funds all of our teacher MacBooks and iPads for instruction, and it is made available through a 5-year lease with Apple, with annual lease payments of $1.5 million. At the end of the lease period and beyond, the current county ideal is to renew this lease, thereby providing new equipment to our students and keep our technology current. We would have to eliminate this program if we lost our property tax revenue. We would also have to lay off the computer technicians necessary to support this initiative, of about $500,000 a year. We also provide nursing support services in all of our elementary and secondary locations. These services are provided primarily through county funding. We would have to cut our nursing support back to state mandated limits, and we would lose 7 of our 15 nursing positions. The remaining $3.1 million a year would have to be cut from our operation and maintenance buildings. We would be impacted to the point of not being able to provide sustainability for our buildings. Significant staffing cuts would have to be made to custodial maintenance staff, and major building and repair projects would not have sufficient funding. Transportation routes would have to be reviewed and consolidated where practical to support further staffing reductions. Personnel benefits provided through our levy would be reduced and eliminated in areas such as salary support, PEIE premium reduction, dental, optical, and life insurance. And then, of course, any remaining cuts we would have to make to regular instructional programs, meaning teachers, aides, and related service personnel. Thank you.